Hello guys, within this video we're going to be taking a deep dive into precision swing points, also known as PSPs, another quarterly theory concept founded by Trader Day. By the end of this video you will know exactly what a PSP is, you will know how to use them, how to spot them, and also at the very end of the video I have a PSP model included. Okay, so let's get into an actual PSP example. To first understand what a PSP is, you must know what a swing point is. A swing point is a 3-candle pattern where we have one candle in the middle that has a wick that is larger than the candle to the left and to the right of it. So if you take a look at the example on the right, you can see we have two swing point examples, and to make it easier for you to understand, we will be numbering each of the candles. So candle 1 is the candle to the left of the swing candle, candle 2 is the candle that creates a swing, and candle 3 is the candle to the right of the swing candle. What is a PSP? A PSP is a swing point, but candle 2, the candle that makes that swing, must have a different closure amongst closely correlated assets. One asset must close bullish, one asset must close bearish. So as you can see on the example to the right, you can see the asset to the left formed a bearish candle as that swing point, whereas the asset to the right actually formed a bullish candle as that swing point. So that is what is known as a precision swing point. It does not need to be a swing point on all the correlated assets, just as long as it's a swing point on at least one asset. PSPs are almost always there before every single market movement. PSPs can be used in various ways for reversals, continuations, and to spot consolidation. We'll be going over exactly how we can use them in all those different ways. So, how to use a PSP in reversals. PSPs are mainly used to confirm sequential SMT. You want to see a PSP form either on the candle that creates the sequential SMT or a few candles after. So if you don't know what a sequential SSMT is, I'd suggest you go watch the previous video as I explain exactly what it is. But just for a quick summary, as you can see in the example to the right, we have two closely correlated assets, and then you can see an SMT occurs between those two consecutive quarters. Once that sequential SMT has occurred, you can then see a PSP formed, which is highlighted by that red dot. The asset to the left formed a bullish candle as that swing point, whereas the asset to the right formed a bearish candle for that swing point. As soon as that PSP had formed after the sequential SMT, price then began to break down. Now we know how to use precision swing points to confirm sequential SMTs for that reversal. There is actually another way in which we can use PSPs to anticipate a reversal. So as you guys know, the precision swing point is that 3-candle pattern, candle 2 being that swing point during that 3-candle formation. However, like mentioned at the very start, a precision swing point doesn't need to be a swing point on every single closely correlated asset, as long as it's a swing point on only one asset. And you may see things like in the example in the top right, where that candle number 2 gets turtle soup by candle number 3, and then on one asset that candle number 2 remains as that precision swing point. So in the example in the top right, that of course wouldn't be known as a precision swing point because candle number 2 isn't that swing point. However, as long as that candle number 2 closes different amongst the closely correlated assets, then it's still a cracking correlation, but that is what is known as a precision candle, because obviously it isn't a swing point, but we do still have that cracking correlation between candle 2 across those assets. So when we see that precision candle form and it be a swing point on another asset, then of course that means candle 3 has run above or below candle 2, which often indicates a sequential SMT has occurred. So the time frame alignment for the PSPs to the sequential SMTs are in the bottom left. You can read through those, and whenever you see a precision candle get turtle souped, then you can expect for one of those sequential SMTs to have formed. Now it won't always be a sequential SMT just because of the timings of those candles, but more times than not it will indicate a sequential SMT. Let's just say for this example, the 3-candle patterns that we have above, they are a daily PSP and a daily precision candle. That is indicating to us that a weekly cycle sequential SMT has occurred, because as we know, a weekly cycle sequential SMT is SMT between 2 days of the week. So if that daily candle runs above another daily candle on one asset and not on the other, then that of course would be a weekly cycle sequential SMT. And the way to know which asset is more likely to create that turtle soup within candle number 3 is just by looking at candle 2's closure. So within a bearish market, more times than not, a bearish candle will not be turtle souped. Whereas if we see a bullish candle form, it's more likely to get turtle souped just because that asset is a lot stronger. And the same for a bullish market, whenever we see a bearish candle form, that candle is more likely to get turtle souped than the bullish candle that forms. So with this in mind, once we see that swing point form during candle 2, and once we see it closes differently across the closely correlated assets, we can be waiting for candle 3 to potentially form a sequential SMT on candle 2's high. So if you look down below at the 2 bottom examples, you can see that is how it would look on that lower time frame. So you can see that SMT is occurring on the lower time frame, while we have the higher time frame giving us that cracking correlation by the precision candle and by the precision swing point. Okay, so now let's move on to how to use PSPs for continuations. So once the order flow has already been set by a sequential SMT, any PSP that forms in line with the order flow / draw on liquidity can be used as an entry. The wick of a PSP is very reactive. Price more times than not will trade into it before trading away from it. You can treat PSPs like order blocks. So if we take a look at the example on the right, you can see we have a classic market maker sell model. And if you look at the very bottom to the left, that market maker buy model began from a precision swing point forming. And then at the very top, the market maker sell model began by that precision swing point forming. So like I mentioned earlier, precision swing points are almost always there before every single reversal and market movement. And also the PSPs are very good draws on liquidity. So once we had the one occur up top, and then we had the change in state delivery followed by it, this indicates to us the price wants to trade lower. So then our job is to spot any PSPs that form in line with that bearish order flow. We can then wait for price to trade into the PSP wicks before then trading away from them. So you can see there's 2 PSPs to the right that price traded into many times before then dropping lower and finally reaching that draw on liquidity to complete that market maker sell model. So the markets move from PSP to PSP. And now let's get on to how to use a PSP to spot accumulation. So if you see multiple back-to-back PSPs, this is a sign of low probability conditions. Within high probability market conditions, you will see a PSP form and price move away from it pretty quickly. So in the example to the right, you can see that price is trading in a very tight range and also forming a lot of bullish and bearish PSPs within inside of that range. What you would want to see is, for example, a bearish PSP to form, price trade into the wick of it a couple times, and then you want to see price expand lower from that. And vice versa for a bullish PSP, you want to see one form, price trade into it a few times, and then trade away from it. But if we're seeing a bearish PSP form, followed by a bullish one a few candles after, or within back-to-back candles, I would recommend to just sit out and wait for the market to get out of that range. So now we know how to use PSPs for reversals, continuations, and to spot accumulation. Let's get on to how to enter using a PSP. So you can enter after the PSP formation has occurred, placing your stop on the PSP high or low. You can enter during candle 3, anticipating the formation of the PSP to form. If you miss the initial PSP entry, you can enter of the first fair value gap that is formed after the PSP. So within the example on the right, you can see once that PSP is formed, that third candle of the swing formation traded back into that PSP wick before then trading away from it. So that is how you would trade candle 3. You would wait for it to open up, trade into that PSP wick, and then wait for price to displace away from the PSP wick. You can then look for a classic inversion fair value gap entry, a fair value gap entry, order block, whatever you like to enter on, and you can scale down to that lower time frame to spot that entry model. If you like to be a little more safer, you can always wait for the PSP to form and then just place your stop on that PSP high or low. And then if you want to wait for even more confirmation, or if you miss the initial PSP entry, You can wait for that fair value gap to form, wait for price to trade back into it before then trading lower. Now, a fair value gap forming after a PSP is a very good sign because price is giving you that cracking correlation with the PSP forming, and then it's followed by displacement, and then having that PD array form to then protect that PSP high or low. So the safest stop loss while entering a PSP trade will always be on that PSP high or low. Now let's get into the precision swing point model which you guys can use. Now I call this the precision swing point TOB entry model. So TOB stands for true order block, and a true order block is the final up close candle inside of a bearish PSP and the final down close candle inside of a bullish PSP. And when I say PSP, I mean that specific swing point candle, so candle number 2 within the 3 candle pattern. You then need to wait for price to close below or above the true order block to validate it, and the time frame alignment to spot your true order block is in the bottom left. So if we have a weekly PSP form, you want to see a daily time frame TOB. Within a daily PSP, you want to see a 4-hour TOB. Within a 4-hour PSP, you want to see a 1-hour TOB, a 1-hour PSP, 15-minute TOB, 15 PSP, 5-minute TOB, 5-minute PSP, and a 1-minute TOB. So I've got an image example to the right of the TOB entry model. So as you can see, the 4-hour PSP formed, and then once we scale down one time frame lower than where the actual PSP formed, we can find our TOB. Once price closed below it, that's what validated the TOB. And then you can see after the closure, we had 2 candles wick back into the TOB, which is when you will begin to look for your entry. So you can either enter on the time frame where the TOB has formed, placing your stop loss on the PSP high, or what you can do is once price tags into the TOB, you can scale down 1 or 2 time frames lower, and then just wait for your classic entry model, so your fair value gap, IFVG, order block, basically just waiting for that lower time frame to displace out of that TOB, confirming that price has respected it. And then from there you can take the trade, and the safest stop loss would be on that PSP high. Also, another thing to note about this entry model is you can use it to trade that candle number 3, just as long as the TOB has been confirmed by the candle closure down below it or above it. So that will conclude the PSP video there. I hope that you guys found this insightful and took something away from it. PSPs are extremely powerful, and if you're not already using them within your trading, I would definitely recommend to do so. Other than that, you guys can check out my socials linked down below in the description, as well as my very own private mentorship and my very own quarterly theory indicator, which can also mark out the PSPs for you, and you can also filter them to be higher probability. With that being said, please let me know in the comments down below which other quarterly theory or trading videos you would like to see. I would also appreciate a like and a subscription. Good luck and good trading.